US stocks climbed again today with the S&P 500, a major US index, showing its best monthly gain since 1987. The market feeling remains positive with the recent US government bond issue going strongly. It was well oversubscribed in the market. With all the debt that has been raised at present, there were some fears that this might struggle. It didn't. Meanwhile, the Treasury Chief was again talking to regulators, encouraging them to consider new rules for the financial sector. He was quite adamant that now is the time to make some sweeping changes. The public are upset at some of the things that have been going on in the sector, especially with AIG, so it is likely to mean that there would be less opposition for lawmaking. Suggestions are that big finance houses should come under the guidance of the Federal Reserve, while banks may be forced to hoard cash in the good times in case they need it in the bad times. New Zealand wholesale interest rates have been skyrocketing over the past few days. 5-year rates effectively moved by 0.35% on Wednesday and then again by a further 0.4% on Thursday morning. Such extreme movements like this are unheard of. While they did move back slightly yesterday afternoon, it is likely that fixed interest rates will have to move up quickly as banks' cost of funding has increased along with the market. There are several reasons for the movement in rates, but the most obvious is that there has been huge demand for people to lock in their rates all at once. People have now seen that longer-term interest rates have been increasing, and so there has been a huge rush to lock in. This demand has pushed rates higher still. The currency too is racing higher. Yesterday it flew through 57 cents and is now moving even higher, now sitting well over 57.5. Talk of higher interest rates comes at a time when the International Monetary Fund says that New Zealand should consider further drops in our official cash rate, or OCR, in order to fire up the economy. They are predicting that our economy will contract by 2% this year and needs additional help. Yesterday's trade data showed that our bank's heavy reliance on overseas funding lines. Effectively, we have not been saving enough over the past 5 years, and so banks have been forced to get money from overseas for lending. When a 1 in 50-year shock happens, like we are seeing now, it makes it much more difficult to get the same money. This is a reason why the gap between the OCR and interest rates has widened recently, because offshore lenders want a premium for their loans.